I make $2,200 in passive income, and this is how you can do that too. In this video, I'll be sharing with you the top dividend stocks that offer the best payout and growth potential, providing a short description of each company and why investing in it will bring you closer to your retirement. Make sure to watch until the end, because I'm not just going to tell you a few random dividend stocks, but show you the ones that paved my way into that sweet dividend income. Dividend stocks are a great way to earn consistent income from your investments, and they can be especially attractive for those looking to supplement their income or even make it their main income. So let's get down to business and dive into the crème à la crème of dividend stocks for 2023. Trust me, you will not want to miss this. Coming up at number 7, we have Abbott Laboratories. Abbott Laboratories is a big company that makes healthcare products like medical devices, nutrition products, and medicine. Abbott makes some very popular products that you might know, like Pedialyte, Ensure, Similac, and Glucerna. When talking about the company's earnings, a guy named Rick Weiss, who's an analyst at Stifel, mentioned that Abbott had an amazing start to 2023. He says that Abbott will keep growing and make more money. Speaking of money, how much can you make from investing into Abbott stock? Right now, they pay 51 cents for every share of stock that you own, which is about 2% of the price of the stock. The best part? They've been doing this for 51 years. A lot of big investors believe that Abbott is a good company to invest in, and in fact, 62 hedge funds invested over $3 billion in this company. Overall, it seems like buying stock in Abbott is definitely something you should consider. At number 6, we have Walmart. This American retail giant is a household name, and for a good reason. Not only does it operate a chain of hypermarkets, discount department stores and grocery stores in the US, but it's also a solid choice for investors looking to earn some steady income. In fact, as of February 14th, Walmart Inc. boasted a dividend yield of 1.54%. And if that wasn't enough to entice you, the company has maintained a whopping 49-year streak of consistent dividend growth. That's right, you heard that correct, 49 years. But don't just take my word for it. Hedge funds seem to agree that Walmart is a solid choice, with 68 of them holding stakes in the company as of the end of the third quarter in 2022. And with analysts raising their price targets on the stock due to better sales trends and solid store traffic, it's no wonder why. So if you're looking for a safe and reliable dividend stock to add to your portfolio in 2023, Walmart Inc. is definitely worth considering. Even Dividend Partners mentioned it in their Q3 2022 investor letter. Need I say more? Next up at number 5, we have Procter Gamble. Investing in a Procter Gamble company is a smart move. The company currently offers a dividend yield of 2.64% and has consistently raised its dividends for 66 years in a row, demonstrating a strong financial position and a commitment to rewarding its shareholders. Moreover, industry analysts like Steve Powers from Deutsche Bank have raised their price target on Procter & Gamble, showing confidence in the company's potential for future growth. Although the number of hedge fund holders has slightly decreased, there are still 69 funds with stakes in PG, with a total value of over $4 billion. Even Rowan Street Capital, a well-known investing firm, mentioned PG in its Q4 2022 investor letter. These factors combined indicate that investing in a Procter & Gamble company is a solid investment that you should not be missing out on. At number 4 is CVR Partners. Despite experiencing a dip in stock value due to the falling fertilizer prices, CVR Partners still offers a great investment opportunity for those seeking dividend payout. One of the reasons why CVR Partners stands out is its historical average of double-digit growth in profitability margins, indicating a solid financial position. In addition, the company can offset the effects of lower prices by reducing natural gas, a key input cost. What makes CVR Partners really stand out is that it has a dividend yield of about 24%, which means you will get a steady stream of passive income from it even during uncertain times in the market. So although lower fertilizer prices may affect how much money the company makes, it's still a great option to earn passive income. If you want to grow your wealth and have a regular stream of income, you should definitely consider CVR Partners. Coming in close at number 3 is Brookfield Infrastructure. Brookfield Infrastructure operates a diversified portfolio of infrastructure business that generates relatively stable cash flow. As a result, the company has delivered a growing dividend for 14 years straight. Brookfield Infrastructure has a long-term plan to increase its dividend rates from 5% to 9% annual rate, powered by the organic growth of its existing businesses and acquisitions. The company has recently secured $2.9 billion of capital across 5 investments, indicating a strong commitment to driving growth in the years to come. At number 2, we have AvalonBay. AvalonBay is one of the largest apartment owners in the US, which means it benefits from a steady stream of rental income. This income supports its high-yielding dividend payout, which is a great news for income-seeking investors. But it's not just the rental income that makes AvalonBay an attractive investment opportunity. The company also boasts a top-tier finance profile, giving it the flexibility to continue expanding its apartment portfolio by developing and acquiring new communities. Although AvalonBay hasn't increased its dividend every year, it has maintained an impressive 5% annual growth rate since its IPO in 1994. In early 2023, the company raised its dividend by 3.8%, which is a positive sign for investors. Given the increasing demand for apartments, AvalonBay is well positioned to keep increasing its dividends in the years to come. So for investors looking for a solid income-generating investment opportunity, AvalonBay is definitely worth considering. And standing strong at number 1, we have AbbVie. AbbVie is a pharmaceutical company that has made a name for itself in the industry, particularly when it comes to its consistent dividend growth over the years. Since its spin-off from Abbott Labs in 2013, AbbVie has been committed to rewarding its investors with increasing dividend payout. In fact, the company has increased its dividend payout by an impressive 270% since its inception, an impressive feat that is sure to attract the attention of any investor. Despite the impending loss of a patent-protected exclusivity for its top-selling drug Humira in 2023, AbbVie is well positioned to maintain its dividend growth momentum. The company has a strong pipeline of new products which are expected to offset the impact of the Humira loss. AbbVie's financial strength, solid pipeline of new products, and management team's commitment to maintain dividend growth makes it a very strong investment option. Its history of consistent dividend growth provides the confidence that their payouts are reliable and likely to continue growing over time. For these reasons, AbbVie is undoubtedly a great option for investors. Thanks for tuning in to our channel. Make sure to subscribe and hit the notification bell to stay up to date with our latest videos. If you've ever found yourself wondering whether you should invest in crypto or stocks, it's a tough decision and I totally get it. But don't worry, because I got you covered. Click on this video where we will dive deep into the pros and cons of investing in both crypto and stocks during a recession. You won't want to miss it.